So yeah, the latest this afternoon, another crypto hedge fund caught in the FTX crossfire. Ikigai fund saying it had a large majority of the fund's total assets on FTX. The firm's partner, Travis Kling, tweeting that by the time they went to withdraw on Monday morning, they got very little out and are now stuck alongside everyone else, as he put it. He adds that it's hard for him to imagine the space bouncing back quickly from this ordeal and says too many people got burned too hard. Sources also tell me that a handful of other funds are in the same position right now, and it might not just be crypto funds, guys. There are likely more traditional crossover funds that dipped their toes into crypto recently. Sam Bankman-Fried told us in an interview back in August that these high-profile sort of power traders, as he described them, were FTX's core clients. Take a listen.
Most of our volume comes from customers trading at least $100,000 per day of volume. And so these are high volume, highly engaged users. And it's sort of everything from like someone in the crypto ecosystem to a small quant trading firm, a family office, to day traders, to larger quant trading firms, to institutions. It spans a lot of different sort of demographics and countries and types of players, but they're all generally fairly sophisticated, fairly engaged, and fairly large volume.
We're also now seeing the fallout in Washington. Sam Bankman-Fried donated about $40 million in the last campaign cycle. Congress members who received contributions are starting to make plans to donate those funds. Senators Durbin and Hoeven are among the names on the Senate side saying they're going to do that. Melissa, back to you.
All right, Kate, thank you. Kate Rooney.
Why not give those funds back to the people that lost them?
There's an idea.
Well, I'm just thinking, like, if they want to do something good, how about all these people? Most of them were innocent investors that lost their money.
Right.
How about channeling it back through?
Right. It's amazing he was talking about, high volume, sophisticated investors use the platform. And now they're all stuck with no money. I mean, they're holding the bag, basically. They're bag holders in all of this. They weren't sophisticated enough to do the due diligence.
It's really interesting. I'll tell you this. If you were looking for an institutional platform to use, forget retail because they were just trading them everywhere. Think about Robinhood over the last 2 years. It became a crypto thing. If you're an institution and you had every reason to believe after doing your due diligence to trade with that institution, that's one thing. If you are an investor, like in this platform, as an entity, you know what I mean? That's where the due diligence, I think, fell down. And talking to a handful of VCs who actually were pitched on this company over the last couple of months, a lot of them were just saying didn't pass the smell test. That's why they didn't raise the capital. But no one came out and said anything, and people were still letting him be on the cover of magazines and everything like that. This is the SBF guy.
Right.
So it's kind of really interesting. I mean, the due diligence on that side seemed to be okay, at least at this stage of the game. But I guess there were enough things out there over the last few months that we've seen, enough blow-ups where people had reason to be skeptical.
Look, think of all the people that paid to have FTX or got paid to have FTX all over them, including major league umpires who are supposed to be able to arbitrate between good and, I mean, they're not, but I mean, not this, but in real life. It's just, it's shocking to think about how this was a company that was elevated to be the blue chip in a new stratosphere of investment.
Yeah.